This is the first emergency broadcast I have ever done. A quick history is that I read a book in 1984 called The Grunch of Giants by Dr. R. Buckminster Fuller. I don't recommend it. But what Fuller said was that our wealth is stolen via the banks, via our money supply. In 1971, there was a guy named D.B. Cooper, and he supposedly jumped out of the back of a 727 in 1971. And his alias was D.B. Cooper. Remember those initials, D.B. Cooper, because what it stands for is deception, betrayal, collusion. So what's going on today is deception, betrayal, and collusion. There's a book by a friend of mine, Nomi Prinz. She wrote the book Collusion. It's about how the central banks of the world, besides they're not really banks, they're really Marxist, they're central, but they're not really banks, and how they collude. And they collude with big companies like BlackRock, Larry Fink. You'll see a video playing of Treasury Secretary Janet Yellen. This is collusion. She was also head of the Fed, and now she's head of the Treasury. Any collusion there? And so our economy is crashing at high speed.
Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVB just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your plan?
Made that determination.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening because you're fully insured no matter what the amount is. If you're in a big bank, you're not fully insured if you're in a community bank.
Well, you're not fully insured. And
you were at Signature, and it just barely met that threshold. You were at Signature.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system.
What did you hear in her DBC, deception, betrayal, collusion? What was she saying that terrified you?
What Janet Yellen was saying, we all left Monday thinking that, hey, it's okay. The banks are going to be bailed out and it won't be at the taxpayers' expense, which we all knew was a lie. It would be at your dollar's expense or your deposits' expense, in the respect that the money had to be created out of thin air. And we just figured that would mean more inflation. And so all of the banks, regardless of their poor choices, their gambling, if you will, in depositors' assets, and we'll talk about that in a moment, that they'd be bailed out, and that this would just be an ever increasing party of printing and of backstopping the banks. And what she said yesterday was truly shocking to me. Basically, she was being grilled by a senator, I believe, from Oklahoma. And What he was asking was, so are you telling me then that all of the small regional banks in my state will be backed by the full faith and credit of the Fed, so that none of these banks are going, if they fail, they will all be bailed out the way that
Silicon Valley.
Silicon Valley, thank you, Bank did, and the other one that just failed as well. And well, basically what she said was that the only banks that will be bailed out will be those banks that have the approval of the majority of the FDIC board, the majority of the Federal Reserve Board, and Janet Yellen herself. Those are the only ones that will be bailed out. In other words, those banks, she said, that in our minds are too big to fail, the systemically too big to fail banks. In essence, what she was saying was that all of those smaller banks are dead on arrival. They won't be bailed out. And if they're not deemed to be systemically important, then they will have no backstopping. And what that is basically doing is herding everyone into a pen of the 4, 5, 6 biggest commercial banks in the world, or in the United States, the Wells Fargos, the Bank of America, the Citi, the JP, the Goldman. All of them are going to be too big to fail, systemically too big to fail, interconnected with one another through a massive, massive amount of derivatives, whereby if they fail, they'll bring down the whole system. But the little banks who run into trouble, and we're going to talk about why they run into trouble in a moment, but those banks, no, they won't be bailed out, and too bad. And what that's going to do is collapse the entire small banking industry, the entire regional bank industry is going to collapse. Who's going to leave their money in these little banks? If you're running a business, let's just say that the Rich Dad Network kept all their money in a small regional bank near your office, people that you've known and trust, and they've been great to you, and they know you by first name, and they know your staff by first name, and they treat you the way you expect to be treated. Not anymore. Those banks are not too big to fail. And if they go under because of the systemic nature of what is happening, they're not going to be bailed out. And it's important to understand something. So all of these banks over the last several years have accumulated with the deposits that they received since the president was able to remove all of the reserve requirements during the pandemic to zero. So most of these banks have virtually nothing in the way of currency on hand. And because they would take these deposits that came in from the depositors, and they would buy bonds with them, typically treasuries, and in many cases mortgage-backed securities, at rates above what they were paying, of course, to the depositors, but in what was typically considered safe places to be. The problem is all of those bonds have an average maturity or an average yield rather of about 2 to 2.5% and long maturities. And so the problem is that since interest rates have risen closer to 5%, every one of those bonds in their portfolio have lost 50% or more of their value. Now, the banking regulations say that they don't have to mark those to market until they sell them. And so they have a whole balance sheet filled with toxic assets that have lost over half their value or more. So in the case of SVC, when you saw a run on the bank, for whatever reason, you get people running on the bank because there's so little cash, the reserve requirements have been slashed to nothing. These banks are forced to sell their bonds at a huge loss in order to meet customer demands to get their money back. And if enough people redeem or withdraw their money, and the banks are forced to liquidate their bond holdings, which have been eviscerated by rising rates, then as we saw last week, a large bank can become insolvent in less than 24 hours. And that's exactly what happened. The FDIC can't handle this. Their insurance fund is only 0.03% of bank deposits, 0.03%, roughly 125 billion in FDIC liquidity backing over 9.5 trillion in deposits.
What did Janet Yellen say? She says, who's going to decide who lives or dies?
It will be her, the overwhelming majority of the FDIC board, and members of the Federal Reserve. So they're going to decide which banks are worth saving and which banks aren't. And we all know which banks they're talking about. These are the commercial banks. These are the banks that we are seeing billions of dollars flow into now over the last several days. People are yanking their deposits out of these smaller banks because they're terrified for exactly this. And when she said this, she admitted the fact that they are going to pick and choose as to which ones they believe are too important to fail and which ones aren't. This is going to herd everyone into these banks. Every one of the people who have large accounts at these regional banks are going to pull their money out, and they're going to send it over to JP Morgan, to Morgan Stanley, to Citibank, to Goldman Sachs, because they know that those banks will not be allowed to fail. What happens if indeed this is the type of plan that they are trying to do, where they herd everyone into a handful of these banks, and then we see a Bear Stearns or a Lehman Brothers moment, where one of them is allowed to fail? Wells Fargo, maybe, or Morgan Stanley, or Citibank. Just one of them fails, creating panic. Everyone panics. That money is now vaporized like that. FDIC doesn't have enough to back it. So what happens then? In comes the central bank digital currency on a white horse. We're here to save the day. And this shows why we need to get rid of the commercial banking system. The banks are in trouble. We're going to increase the tremendous amount of inflation that's already into the system. We're going to increase it to bail out those banks that are systemically too big to fail. And they've already told us it won't be via taxpayer injections or bailouts. They've told us that FDIC only has 0.03% backing, so that won't work. So they'll print money to bail those banks out. But everyone's going to flood into the commercial banks. And then they are ripe for whatever they have in mind. If they let one of them fail, just one, everyone will panic and embrace the new CBDC currency, which we have been told by the Bank of International Settlements that everyone must have. All countries that are part of that network, the BIS network, has to have an operational CBDC by 2025.
Time for the important announcement. Now you can join our community of 5,000 plus members and active stock market investors and receive the latest timely stock market and economy related updates, like what stocks to buy and what stocks to ignore or sell to save your portfolios. Economy and stock market related commentary and alerts are shared regularly on a weekly basis. You can also chat with me during market hours and ask me any questions. Join our community on Discord through Patreon. Upon becoming a member, you'll be able to enjoy some great perks. For example, you'll be able to receive proper buying and selling alerts for a wide range of potential stocks. We'll also share tips and alerts for option trading. You'll receive a weekly guide for stocks performance and updates with technical analysis. You'll be able to chat with over 5,000 like-minded members all the time. And you'll also be able to chat with me during market hours. I'd be delighted if you could join us. The link to join is given in the description below. Thanks, and see you on the other side.